The Business Breakfast on Jazz FM. With Oanda, start your day with the latest business and city news and enlightening guests with Michael Wilson.
A very good morning to you. It is coming up to 2 minutes past 6. I'm Nick Howard. Thanks for joining me, sitting in for Michael Wilson this morning. On the programme today, stock markets have plunged around the world as investors fear the impacts of coronavirus on global growth. In the UK, as you heard, the government is moving to the second delay phase of tackling the infection, but isn't banning public gatherings or closing schools. Qiaojia Li, the CEO of digital wealth managers Rosecut, is with me to tackle the business headlines. It's all coming up on the programme this morning. It's Friday, the 13th of March. Well, a very good morning to Qiaojia Li, the CEO and founder of digital wealth managers Rosecut, with me going through the morning's business headlines. We must start with the enormous falls in stock markets around the world overnight and yesterday. That point about it being the biggest fall in the US and the UK market since 1987, the situation seems very different. But just take me through what's actually going on here. We're seeing investors looking at, I suppose, what the impacts of coronavirus is going to be on global growth and how governments are dealing with things.
Morning, Nick. It's great to be part of this. And also, to answer the question on the stock market it's currently a classic panic selling going on at the moment around the major markets, both in Asia, US, and Europe. I think investors just really want to know where the bottom is. And this is because not just the coronavirus imposes real challenges to the real economy, but also the oil price turbulence caused last week has made investors really nervous about this. Actually, the markets are really responsive to the policies. We've seen central banks cutting their interest rate as part of the monetary policy, but the market is basically saying this is not enough, show us more.
And then, if that's the case, where is money actually going at the moment? In these situations, there tend to be safe havens.
So this is one of the unusual circumstances where almost across the asset classes, everything is going south. So from gold and equities and all these different type of investments. So we haven't seen this in a while, to be honest. And this is it's not your usual regime, to be honest.
And what then is the effect on the real economy? Obviously, the stock market and the value of particular equities is one thing, but the day-to-day effect on, I suppose, kind of us, the everyman people in the streets. What is the connection here?
That's a really good question. I think the point is that there is real economy and financial markets. These two things, they are not always sort of worked closely in tandem. Stock markets is sort of the forecast of the real economy. Now, dropping interest rate actually could mean benefits for the everyday, every man on the street. Because you get lower mortgage rate, you get cheaper oil as a result of what's happened recently. But however, it also means the corporates that's listed in the market feel less confident about the future and spend less in the research and development or growing the company, really. So it might impact the income and spending of the consumers as well. So what basically market is hoping for at the moment is fiscal policies, basically cut tax to increase spending, or government projects to really pump up spending as well.
Now, of course, in the UK this week, we've seen major steps in that direction. I'll be asking you about those a little later in the programme. But my interest right now is in the travel restrictions, which are coming in different parts of the world because of coronavirus. Obviously, we saw the US yesterday talking about stopping foreign nationals from Europe travelling into the US, but now also Beijing, the city, is quarantining all foreign nationals going there for 14 days in a bid to stop the disease's spread. this is going to have major and potentially longer-term impacts on the, not only the spread of, for example, tourism and things like this, but also in terms of business.
I totally agree. I think with the Chinese government policies, which tend to be more draconian, as we're aware, the current travel ban around the world does bring profound damage to business and globalization, really, because all these sort of previous relationships channels are killed off. So we will see a quite a temporary shock to the system for the next, maybe months or quarters to come. But I'm feeling optimistic here because I felt like the businesses and the real economy always bounce back. And this is what we need to remember during the moment of panic throughout the financial history. Doesn't matter how bad it looks at the moment, it will bounce back. It's just needs time, really.
So, picking up on that optimism, and we did have figures from the World Health Organization and others suggesting that the kind of social distancing measures that are being brought in should really, given our susceptibility to infectious diseases, be more permanent. You don't see these kind of governmental measures in terms of travel restrictions elsewhere as something that might be a more long-term situation. I'm just thinking that if you're the kind of government that has already tried to slow down incoming immigration into a country, you might be thinking this is a time not to waste a crisis.
I tend to agree with that. We should not waste the crisis by putting in some social distancing measures. But there are different approaches to that, right? So what we heard from Boris Johnson yesterday is very different from what Chinese government has been doing. One thing I would say is that we are in the process of figuring out this virus, the infection rate, the death rate, and how best to contain it. There are more, stats and research and modeling to work it out. And it also doesn't mean there's a single right answer. Time will tell, which is more effective. You could argue that both Singapore and China have been able to manage it reasonably quickly so far. The point is that this could bring to a new level of thinking, and there are also other positives that might come out of this. As from the entrepreneur's lens, in 2003 at the peak of SARS, and this is the sort of the year e-commerce exploded in China.
We've heard, obviously, about some of the impacts on particular sectors and industries from coronavirus. We'll just pick up that point. Obviously, your firm is dealing with clients' money and looking ahead at sort of their financial picture. How are clients really feeling at the moment right now? Is there any sense of concern from them?
That's a really good question. I think there's two topics here. So coronavirus, I think people are feeling concerned what that could impact for them. So a lot of our clients are entrepreneurs, so they worry about there might be a sort of a prolonged economic slowdown coming out of this. Whereas financial markets is quite interesting. If you're not glued to your screen to watch the daily fluctuation or the mad sell in the past 2 weeks, you're not too concerned about it. And this is what we mean by the short-term volatility driven by the sentiment should not drive your long-term investment decisions. So for us, so far, I think our client handled this well. We've sent out, communications to them to keep them updated what the market has been and been doing, and also our active management means that we have a bit more downside protection. So it's business as usual for us, really.
Now, we spoke earlier in the programme about the monetary policy response to all this, that central banks like the Fed and the Bank of England have been lowering interest rates to record lows, but also making much more easy lending, etc., available. I'm interested in the fiscal policy side. We've seen from the Chancellor in the UK a raft of major spending proposals, but also huge borrowing of a kind really not seen for decades, particularly from a Conservative government. If this is the new norm, huge borrowing, huge spending, I mean, surely this is going to be replicated in other countries with their own central banks, etc. This could be a major change in terms of how money is available in terms of markets, etc.
Yes, it's. I think one thing really important to note is that we are in sort of uncharted territory at the moment. What has happened, for the past couple of weeks is unprecedented event in many ways, right? So we are dealing with a real sort of global pandemic, which hasn't happened in past 100 years. So we don't know, whether these policies, fiscal policies, is going to be everlasting or rather a temporary measure to sort of help with the liquidity and help to boost the economy and give some certain industries like airline and healthcare a bit of support. There are really smart people working on this at the moment. But what is clear is that there definitely needs more measures to give to pump enough liquidity in the system, as well as increase the spending, maybe tax holiday on people's income, and particular support in those sectors are heavily impacted.
Qiaojia Li, CEO and founder of Rosecut, thank you very much indeed for your time this morning.